Good evening, everyone. Good evening. This is 𝗕𝗲𝗀𝗀 here from Reason from Ashes again. I hope your Thursday so far has been a great one and is we are about to enter Friday as well as the weekend. So, how's everyone been so far? If you have been following my series for this week I'm talking about the urgency of handling tax matters properly. Well, it's not just about tax, but there's the mindset behind it. Now, you see, today is what I call Threshold Thursday. And this is where I want to emphasize the importance of this week's topics in relation to tax. Even though I myself am not a tax advisor, but I've spoken enough with a lot of tax advisor friends of mine, and we have teamed up, to want to spread and raise awareness on how the importance of handling tax, your own personal tax as well as business tax properly. Now, you see, most people think tax problems begins when someone tries to cheat. There's always a connotation that's attached to it. Well, if someone is in tax trouble, it's always they try to evade tax. But honestly, most don't. Because most begin with something much quieter, assumptions. This side income may be a bit too small, or I'll sort out the receipts later, or one missed filing shouldn't matter, or they get personal and business expenditures blurred. Now, and because nothing bad happens immediately, people assume everything is fine. I shared my friend Bill's story this week, okay? Like I shared earlier on, Bill called me recently, contacted me. He was panicking in his voice, and he was telling me, Gary, when I received this letter from LHDN or IRB, Inland Revenue Board, which is a tax authority. Now here's the important part. Bill wasn't hiding millions, okay? He wasn't even trying to commit a fraud. He filed taxes every year, as he dutifully does, okay? And he paid whatever he thought he owed. He even had an accountant. And still, the letter came. The letter from the tax authority came. Because being compliant and being structured are not the same thing at all. This is where a lot of us professionals or even business owners and entrepreneurs and even employees sometimes, misunderstood. Compliance gets you through the deadline, yes, but structure gets you through the audit. That's the difference most of us never realize. Because tax isn't just about paying what you owe. It's also about whether your financial story that you're showing to the tax authorities actually adds up and makes sense. You see, three things Bill never properly built. First, income clarity. When it comes to salary or freelance income or rentals or even side income or platform income, this is where most people see separate streams. But tax authorities like LHDN sees total income received versus the total income declared. And that's where the gap is. And when there's the gap, that's where questions begin. Second, expense segregation. Personal and business expenses blurred together. This should be claimable, or I'll organize it later. Some of you may have said to yourself, okay? But when the lines blur long enough, your numbers stop telling a clear story. Now, when your story and when your number stop presenting a clear story, guess what? Someone else, namely the tax authorities, will interpret it for you. Usually, it's not in your favor. Third, audit trail. Not mixed receipts, not spreadsheets that you barely understand, but a structure that still makes sense years and years later. Because the tax authority just doesn't just look at 1 year. They look at patterns across this year. In Bill's case, he got questioned for 5 years. He got questioned for the 5 years. Right? So here's the part most people never really think about. Bill still had a window before the audit began. For for an opportunity of voluntary disclosure, perhaps to appeal for leniency for lower penalties and even more options. But like most people, he chose to drag his feet on it because he thought he still had time. That's the threshold, because voluntary disclosure only works before the letter from the tax authority arrives. After that, the penalties multiply, options shrink, and the story is no longer yours to control. So let me leave this with you for tonight's reflection. There are 3 decisions that separate people who survives audit well from those who don't. The first one, decide to face your real income picture honestly. Yes, understand clearly what's your real actual income and declare it as it is. Okay, anything that goes in, declare. Decide to separate and structure before the lines blur permanently. Okay, if you don't know how to do all this, engage the services of your tax consultant. And finally, decide to act while the window is still open. If you know you misdeclared or if you know you are underdeclared in order, either surrender yourself to voluntarily disclosure to the tax authorities, or again get your tax advisor for assistance to help you with that. Because for every year that you delay, the record starts getting harder to reconstruct. The patterns get harder to explain. And the cost of fixing it compounds quietly in the background. And if you don't decide, guess what? The tax authority, namely LHDN or IRB, decides for you. So if this video made you pause for a moment, drop me a DM and comment check, 𝗕𝗲𝗁𝗂, right? We'll talk about this privately, because most people don't need more fear. They need clarity before the window closes. This is 𝗕𝗲𝗁𝗂 from Reason from Ashes. I assure you, if you need service, if you need assistance on this, reach out to me. I will walk through this with you privately, or if you need help to connect with a tax advisor, I will help you to connect with one. Again, thank you very much. Have a pleasant evening. I wish you a pleasant Friday ahead and a pleasant weekend ahead. Thank you very much. Thank you.